5 assets that are better than cash right now. Over the previous 100 years, inflation has eroded the dollar's worth by 97%. To compare, $20 in 1913 bought 26 McDonald's coffees, but today it is only one. Money hasn't changed, but what it can purchase has. I'm sure you felt your money isn't going as far as it did even a few years ago due to inflation. After hitting a 40-year high, inflation has dropped to 3.7%, but is still high. Additionally, most bank accounts give only 0.05% interest on savings, which isn't enough to combat inflation, so your money is losing value simply resting in a bank account. You may feel comfortable leaving your money in the bank, but without interest, it's losing value, especially with strong inflation. This leaves many wondering where to deposit their money instead of in a bank account. In this video, we'll review options and their pros and downsides. Number 1. Stocks. Stocks are straightforward investments for most people. You can start investing in stocks by opening a bank or Robinhood online brokerage account and funding it. Many stocks have delivered spectacular returns for shareholders over the past few decades. Since 2000, Apple, one of the world's most famous companies, has returned approximately 22,000% to its stockholders. This means $1,000 invested in Apple in 2000 is worth $228,000 now. These gains have exceeded inflation and made many investors ridiculously rich. The stock market is number 1 because of its accessibility and history of high returns. I also made a watch list of equities I think are world-class, including Microsoft, Apple, Amazon, and others. I'll link to this list in the video description. It might be difficult to predict which stocks will perform well and which will not. For every Apple, dozens or hundreds of stocks have lost investors' money. ETFs, our second pick, are popular because of this. ETFs are like buying a portfolio of equities instead of purchasing them individually. ETFs let you buy many equities at once. ETFs trade like stocks on the public stock market, so you can purchase and sell them quickly. SPY, a popular ETF, holds all S&P 500 companies. By buying this SPY ETF, you're buying 500 of America's best companies at once. You can buy hundreds of equities through one ETF instead of individually. Since 2000, the SPY ETF has returned 200%, making a $1,000 investment worth $3,000 today. Hence, this SPY ETF has hedged and expanded investors' wealth from inflation. ETFs also reduce the risk of picking weak equities that lose money and simplify diversification. ETFs make investing passive and easy by eliminating the need to study, pick, and value equities. ETF investment is popular since it's simple and passive. When choosing an ETF, there are 2 main factors. First, comprehend the ETF's goal, then its expense ratio. There are thousands of ETFs tracking green energy, real estate, and technology. Investors can also choose diversified dividend ETFs. Thus, you should ensure that the ETFs you buy match your investment goals. To maximize portfolio growth, a dividend ETF is not a good investment. The expense ratio, the cost of investing in the ETF, should also be considered. The expense ratio covers ETF expenses including manager wages and investor promotion. The higher the expense ratio, the more you spend for that ETF and the lower your returns. Over 30 years, a 1% expense ratio can cost you 33% of your returns. This SPY ETF has an expense ratio of 0.09%, so investing in it for 30 years would cost 2% of your total profits. Although these expense ratio changes seem tiny, they can have a big impact on your profits over time. Find low expense ratio ETFs to enhance profits and wealth over time. Third on our list, cash ETFs. Money market funds and government bonds are low-risk investments for cash ETFs. ETFs are liquid, which is beneficial. So instead of buying a 5-year government bond, buy a cash ETF to keep liquidity and collect interest. This again lets you access your cash immediately instead of tying it up in a government bond for years. Due to rising interest rates, cash ETFs now yield more than inflation, safeguarding and expanding investors' wealth. These ETFs offer higher rates than typical bank accounts, making them better than cash. Investors invest in cash ETFs to receive a larger yield than depositing their money in a bank account at lower interest rates. Again, cash ETFs expense ratio and yield are important. So look for ETFs with the lowest expense ratio and highest yields. This combination gives the highest ETF net return. Understanding which assets ETFs invest in is also crucial. That way, you know where your money goes when you buy the ETF. Fourth on our list, real estate. Real estate can be very challenging to get into and start investing in. You need to know which properties can produce a good return on investment and potentially cash flow with renters. It also involves a large upfront investment paying lawyers, closing costs, inspections, and more. On top of this, becoming a landlord and managing tenants isn't what many people want to do, as it can become very cumbersome and time-consuming to manage. Due to the cost, complexity, and time investment of real estate, many people stay away from investing in it altogether. Real estate can produce incredible returns if the investments are managed well and done right, though. However, it is important to understand that real estate isn't a for-sure investment that will always work out. For many people, investing in real estate through REITs can be a more attractive option. REITs are real estate investment trusts that trade on the public stock market. They're essentially real estate companies that anyone can buy and sell or invest in if they choose to. The great thing about REITs is they allow investors to invest in real estate without the headache of managing the real estate yourself. There are many high-quality REITs on the stock market as well, and many of them have produced incredible returns for their shareholders. REITs also typically pay out a large amount of their profits as dividends to their investors, which causes many income investors to love these stocks and have them in their portfolios. Additionally, there are many different types of REITs. Some are focused on industrial real estate, residential real estate, self-storage facilities, or a combination of all of these different types of real estate. This gives investors further optionality as to what types of real estate they would like exposure to in their portfolios. Additionally, investing in REITs gives investors liquidity, which isn't usually an option when people are investing in real estate. Typically, your money will be locked into a mortgage and you won't be able to access it until you sell a home, which can take months, if not years. Since REITs trade just like stocks on the stock market, investors can buy or sell them immediately, which gives them much more financial flexibility and liquidity. Ultimately, REITs can be an easy and hassle-free way for investors to gain exposure to real estate. Moving on to number 5 on our list, owning your business. Owning your own business is another way that you can invest your money, although it's arguably the most risky one on this entire list. Businesses are not guaranteed to work out at all, but if they do, then they can produce some very high returns on invested capital. For example, I am a co-founder of Stock Unlock, and I initially was investing my own money into building and growing this business. It wasn't producing any returns for me initially, so basically I was just putting all of my money into the business and not seeing any returns. But now Stock Unlock has thousands of paying users, and the business generates consistent cash flow for me. Relative to the amount of money I have invested in the business to date, it has produced returns that are in the thousands for me. It took a lot of hard work, and it still is a lot of hard work. But investing in the business has arguably been one of the best investments I have ever made. It will hopefully continue paying me dividends for a long time coming. So if you are more entrepreneurial and starting a business is something you feel called to do, then I am here to tell you that it can work out, and it can produce incredible results for you. However, it is not an easy path, and it does involve a lot of hard work, late nights, long hours, and a completely different lifestyle than your typical 9-to-5 job. The most important thing is to believe in yourself as well, because when you're faced with difficult challenges, the only thing that will push you through them is believing you can make it to the other side. As Henry Ford said, whether you think you can or you think you can't, you're right. Your mindset is everything, and a lot of the time outcomes are based on your perspective and your beliefs. So try believing in yourself and you'll be surprised by the results that you see. That concludes today's video, everyone. Many thanks for viewing. If you liked the video, please like it. It helps my channel and video reach more people. If you're new here and haven't seen one of my videos, please subscribe to the channel, that'd be great too. Again, it concludes the video. Thank you again for listening, and I hope to see you in my next one.